Now I know that these look like just candlesticks, but in reality they are representations of time. Only certain candlesticks are important. In today's video, I'm going to teach you what I've been teaching my private group for ages now. I'm going to teach you which candles we actually need to use. I mentioned in my previous video about session candles. Now, I want to focus today on the 9 a.m. session candle. This one candle is a key reversal time. This one candle gives us information on when we should continue in prices trend or when we should reverse in prices trend. Let's not waste any time and get straight into this video. So the key candle I mentioned is obviously the 9 a.m. candle, on Forex that is. On indices, a lot of you asked in the last video, what is the key time for indices? I would focus on the 10 a.m. candle. That is a key candle for reversal or continuation, because an expansion is going to occur on days when it's set to occur. It is either going to be in the form of a continuation or the form of a reversal. Anyway, on Forex, we are on the AUD/USD chart here. We want to focus on the key 9 a.m. candles. Take a look at these candles I've marked up. These are 9 a.m. candles. This is a continuation. This candle continues the move that started here. This is also a continuation. This is a reversal. So we have bearish order flow. Bearish order flow is respecting up close candles and moving lower. That is what price is doing. Now, one candle theory tells us that these specific one candles, certain candles, you don't need to focus on many, just certain one candle is going to tell you whether price is going to reverse, consolidate, or continue. Now, if we're in bearish order flow, we obviously want to catch tops. You are not trying to pick tops in bullish markets. You are trying to pick tops in bearish markets. Let that sink in for a minute. You are trying to pick tops not in bullish markets, but in bearish markets. So that is a reversal. If you take a look at this price action here, what have we done? You first must establish what we have done. We have traded back here into a 4-hour fair value gap. Now, a fair value gap only appears when we have displacement in the market. Without displacement, a fair value gap shouldn't appear. That's when you get these really small fair value gaps that don't mean anything. With displacement, that's when an actual fair value gap appears. And displacement is when smart money are participating in the market you are looking at. That is displacement. We then retrace, back into these two up close candles before the drop down. What we did over here is we took out buy side liquidity, traded into a 4-hour fair value gap. Look at the time we reversed back here. 9 a.m. 9 a.m. the key session candle I told you about in the last video. Now, I did speak about 1 a.m. candle in the last video, but that is London session. I am primarily a New York trader because I like to use the information from London to inform me about what New York will actually do. I found through my journal that my strike rate is way higher when I do this. So the 9 a.m. candle here wicks into the fair value gap further, rejects 50% and closes inside the previous candle. We then reverse for the rest of the day. So the information from one candle, again, one candle theory, what I taught you about was not just for fun. It wasn't for ad revenue. It wasn't for any of this. It was to give you information and lead you on to what I'm going to teach in 2025. Big things are coming, and one candle theory was introduced at the right time. So you guys can wrap your head around it first, then we can dive deeper into these theories. So one candle takes the high, closes inside the previous candle in a key level after sweeping buy side liquidity. We then reverse. So all of that one candle gave us all of this information that we're going to do that. Back over here, we rally higher. We continue, by the way, in this 9 a.m. candle. This low is left intact. If we zoom in, this low here is left intact here. We start rallying higher and then we drop at 9 a.m. Remember, I said 9 a.m. can either continue or reverse. It can consolidate as well, but you will be told when it's likely to consolidate by previous price action like this. If we're stuck in a range, 9 a.m, ignore it. It's just going to be accumulation of positions so that the algorithm can knock out participants later. We continue lower, take out the sell side liquidity at the key time of 9 a.m. Now we rally higher. Again, take your premium and discount. Simple premium and discount. Above 50% is a premium. We rally into a premium. You have this whole order block here. And yes, this is all an order block before the move lower. 2 consecutive up close candles before we close below at 9 a.m. We rally higher. And then obviously we're working inside this range. We're working inside a premium of this range. You have also an inverse fair value gap that's traded through and used on the other side for new distribution. You take a look, we rally into a premium, and then now we are looking for, do we reverse? 1 a.m. trades above the highs and then closes inside the body of this candle. 5 a.m. continues, and now what can you expect? Because 1 a.m. actually gave us a reversal and we are trading in bearish order flow, what can we expect from 9 a.m? The answer is an open, a high, a low, and a close, or in other words, a continuation. Continuation often happens in the form of this: open, high, low, close. Simple. You are trading from here to here. That's what you're focused on, the distribution, or in other words, the continuation. You take a look here, we have an open, a high, a low, and a close. All of this range, you are trading short. You are going short in there because of the logic. Sweat buy stops over here. We sweat buy stops. So if we're bearish, what is the logic that we need to come back above this high? Because we've already induced buyers. So they're already trapped. Why would we need to come back above the high? It wouldn't make sense. So, and then 1 a.m. traded into a premium key level. Remember the inverse gap, the order block, closed inside the previous candle, and then we distribute. We get the continuation play at 9 a.m. And then remember, I told you the market can consolidate. We do not interest ourselves until there is proper displacement. We displace lower over here. So take a look. This is accumulation. You all know about the power of 3, right? The power of 3, accumulation, manipulation, distribution. This is all accumulation after we distributed. We then drop. We drop lower. We spike above a high here. So we take out liquidity and then drop. We then have an up close candle, and then this bearish candle closes below this up close candle. Notice how this one never closes below this one. This one here does. We then get continuation during this candle. So what we have done here is we've started to displace away. We've consolidated, began the displacement, and then rallied. So we've had accumulation, we've actually had distribution, manipulation, and then we can look for distribution. How can we look for distribution? Well, look at our key candle. One candle tipping its hand once again. Now I say this in the Telegram over and over again. One candle tips its hand to us. One candle can give you bias. One candle can give you an entry. It can give you everything. The 9 a.m. candle here, after all of the logic I've just outlined, sweeps the high, closes below the low. That's a key reversal pattern. And then we get open, high, low, close. Exactly what I talked about. Exactly what I just spoke about is happening in the markets, and it will continue to happen, guys. This thing will never stop working because it is the market. It's not another phony model developed by anyone else. This thing that I'm teaching is the algorithm. The algorithm runs on this. With that being said, I will leave you guys to go into your own charts and look at these single 9 a.m. candles. I'll leave you guys with that, and that will be today's video. I hope you did enjoy. Please do drop a like if you want to support my content, and subscribe if you are new and you enjoy what you are seeing. 2025 is going to be a huge year for us all. I want to teach you guys the in and outs of this algorithm and how it actually operates. I'm tired of loading up Twitter and loading up YouTube and seeing people teach order blocks wrong, or seeing people teach these concepts wrong. Okay, they're doing it an injustice because there's logic behind this algorithm and it needs to be explored. With that being said, if you do want to explore this algorithm deeper with me, my mentorship is currently closed for a few months. Now, I mentioned I'll open it up again if the demand is enough, but for now, join the free Telegram in the top link of the description. Again, it is completely free. I go over logic in there. I give updates of what we're doing and when. And when the mentorship finally opens and you can become a student again, I will be updating it in there. So join there, it's completely free, and just keep up to date with what I'm doing. With that being said, I hope you guys did enjoy the video. Thank you as always for watching, and I'll catch you in the next one.